Okay, I think we can begin. Hi, everybody. Good morning. Thank you so much for joining us on a Saturday morning. And in this webinar, we're going to be talking about gold and how it has hit a new all-time high. I will be joined by my colleague Harshil. Okay, so we will get on with the presentation. I'm sure a lot of you are thinking that, gold is skyrocketing. What do I do about my investments in gold? Some of you may already be clients, so you will be getting a certain level of communication from us. But in general, there has been a lot of huff and puff about gold, which is what we want to discuss in today's webinar. So like we all know, gold did hit a massive $3,500, right? So now some of the signs that we've been getting, as to why we should have maybe waited, or is it a good time to exit? Should we still keep investing? So as an investment advisory, there were certain signs that we were looking at, and we're always, on the lookout for data to see, if it's peaking out, or is it not going to continue from here on? What do we do about such investments, right? So the idea is to take some risk off. It's not that we're negative on gold. We're very much positive on gold, and we expect to have another strong year for returns this year, right? But having said that, does it mean more inflow going into gold at these levels? Probably not. So maybe if there's something that does come up in favor, then we will look at it, but otherwise not so much, right? So now what is happening to gold? Why is the price of gold going up? If you look at the graph itself, it's just skyrocketed, right? From the 2,300 levels in June 2024, we hit 3,500, right? Why is this price of gold going up? So like we all know, the central banks have been constantly buying gold. I'm sure that you're all aware that central banks have been on a buying spree for over a decade now. And major buyers now have turned out to be India, certain other emerging nations, China as well, right? So when the central bank demand comes in, that demand is not going to go away. It's not like the demand for ETFs, right? That it comes and goes. It's a very sticky and very high demand. And it's not speculative in nature is what we have to keep in mind. Now, second, so when there is strong demands coming in from central banks by themselves, now the speculation is majorly on tariffs and geopolitical tensions. There's so much going on in the world. And now there's tensions about India, Pakistan, all of that. So there will be a certain level of volatility that you will see up. And that's why the reason has come up to say that historically, if you look at data, there has been a lot of volatility coming in on this side, which is sort of unwarranted, for a metal like this that should not show as much volatility. But hence the right decision to say that right now we will take some risk off, but we're still very positive. Take some risk off to capitalize on some cheaper parts of the market. Right now, gold has done phenomenally well in terms of other currencies, right? So when we compare gold, we only have to compare it from a currency standpoint and not from how gold is doing versus equity. It is another asset class altogether, right? But if you look at it from, a currency standpoint, if you look at this table, USD 19% this year itself. Last year it was 27, etc. So across all currencies, we've had a very large revision, rebasement in terms of price. What does rebasement mean? It basically means that the value of the asset itself is just different. It's not re-rating where it can come down. The price itself is completely different. Now, why this is happening is right now in terms of your inflation level. Why are we talking about inflation? Why is it important that we talk about inflation in this scenario? All of this is definitely pushing up the price of gold, right? We all hear gold to be a hedge against inflation. We hear all the positives, but what is actually going behind such reasoning? Do we have data to validate this? Of course we do. Now, all of these factors is definitely pushing up the price of gold, right? But does it mean that you should sort of go chasing it? The answer definitely is going to be no. We already have, I'm sure a lot of you already have good amount of investments in gold. And I'm sure it has protected us from all of the issues that there have been, right? And it also protected our purchasing power, which is a very positive thing, right? And that is what we are looking to do. So now how does gold, how does inflation impact gold? If any of you want to take some guesses, please feel free to put your answers in the chat box. How do you think inflation impacts gold? Please feel free to put your answers in the chat box. So we all know that inflation has been very sticky, very high, and it's expected to be back. And a lot of investors might rush in to buy more gold. I'm sure a lot of investors have already rushed in to buy a lot of gold. And that's what essentially we're going to be talking about. The participation at a retail level in gold has been going up, right? Now that's the data that we have here. So the whole point is that since the retail participation is also going up, a lot of people are looking at gold. Hence the extreme volatility on the way up. There is also going to be volatility on the way down. And there was a scenario in the middle where there was no physical gold. So the price was, it was going a little haywire, but these are some risks that you might end up running in your portfolio. Right. So we asked that risk was much more higher than that of equity. Now, hence the decision to say no, we will take some money off the table, take the risk off, and maybe, look at other opportunities. So the whole point being that whenever there is an inflationary impact, right, your gold in that entire period still continues to do very well. And like we all understand and we're all aware that inflation is not a 1-2 year thing. This is a very sticky level of inflation we're looking at. So when we look at say a 4 to 6% sort of an inflation rate, you will see the normal CAGRs usually at a higher side, right? That doesn't mean that you will not have a bad year for investments. It will continuously be like this. Some might be bad. We saw one bad year coming in for gold. But overall, you have very, very strong performance coming in on precious metals, particularly on gold. So now when you look at this chart, yeah. Yeah. So this chart is basically on the inflow of gold, right? It means that as an asset category, it is not very volatile. When you see the volatility on the way up, that definitely causes concern to say that there might be volatility on the way down. How much inflow has there been into gold, right? So, yeah. So what we have to look at essentially is that as much as there are concerns about the volatility, it is better to take something off, right? But when there is high inflation in periods of sticky inflation, precious metals, they stand to do very, very well as compared to say that of equity, because growth has to come in and then growth falters, demand slows down. But this, as a metal, lower supply, hence the level of advantage to hold gold. Now, the largest 4-week inflow of gold in February, right? You see a lot of money has been going into the gold part. This has been the highest. The last we saw this scenario, 2020, middle of 2020, 2021. And right after that, you saw that the price of gold had some amount of volatility on the way down. So we wanted to be a little cautious when it came to dealing with the metal at this time. Right, but if you see the data here, it's showing that a lot of money has been flowing to gold since February. Right, so no point chasing it anymore, right? A lot of money has already chased it. That's what we're essentially talking about. Like how physical gold demand has been extremely on the higher side. There's a massive import of gold bars into the US. And how there was a period in January where there was not a lot of physical gold available for delivery, that created a sort of scenario for the gold price to go up. Correct. So we're in that scenario right now where a lot of risks are developing on the gold part, which we don't think that investors should actually take. Although, like we kept mentioning even initially, the asset class is very positive here. And there are certain risks that are developing where it is already factored in, and it is sort of showing up in the prices now. Okay. Let me sort of ask you a question here. I'm sure a lot of you have been reading about gold. There has been so much information coming in about gold. So maybe we can take a few minutes to talk about what your understanding of this whole narrative on gold has been. I'm sure you've been consuming a lot of content. There has been so much that has been coming out on precious metals. Now gold, silver is becoming a bright and shining opportunity as well. So what do you think? Do you still think that we should go ahead buying gold? What is your whole opinion on this narrative? I can take a few comments on the chat box and then we can move ahead with the presentation. So this was a slide that we saw on importing gold bars. Now this chart is very important for you to see. We all know that gold production has increased. Recycled gold will come in. More recycled gold will come into the market, right? And then there is one angle. See, there's one side of the narrative that says that gold will go up. There's one side of it that says no, definitely gold is going down. There's a lot of speculation that's going on gold, which is why this chart is very important for you to see. This is basically a check on the normalized terms. So the movement that we saw in gold, right? How that will look today, right? So it has been normalized to the 2016 to present levels. So in the 2000s, your gold was, at 7% normalized. It didn't rally as much. Gold today itself has not gone that much higher, but the volatility is definitely much on the higher side. So now look at the 1970s, which is the red line. It has just gone haywire, right? So the line has gone bonkers. It's going up and down, up and down. So if somebody had started with that same level, look at what would have happened if it had normalized. Normalized for inflation, all other factors, everything is factored in. What would have happened? So looking at this data, what we get to infer is that gold today, it stands as the best investment of the last 25 years. It has beaten equity as well. Right. So whatever said and done, there is so much of positivity around gold, and rightfully so. Many of you said that, this is the time for gold. You have to buy gold. It acts as a shock absorber, all of that. So this whole narrative on gold, it's not to be misconstrued as something negative, right? It does not mean that it is a bad place to be. All that we get to infer out of this narrative is that there is some amount of volatility that is coming in. It still does not mean that it's a bad asset class. Still very bullish, still very positive. But should we still be chasing it is the question, or are we seeing better opportunities? Right. So these are some questions that you should probably answer while you're looking at gold as an investment. So do you think that at this point it needs to be overlooked? This problem may arise. People might tend to think that because of such tensions, we might overlook this asset category altogether. Right? But today that is not the scenario. What is happening is just that alternatively equity is becoming cheaper to buy in terms of valuation, and hence that decision to move. But do you think that, with this whole Trump 2.0 and this whole movement in currency, that it would disrupt the investment trajectory of gold whenever the index is at peak, that you either see S&P 500 at a peak, gold is doing extremely well. So in this chart, right, you see gold doing extremely well in the 2000 sort of 9, 10, 2002, 2009, 10, 12 sort of period, right? And that's why the number has gone down. The yellow line is the ratio, S&P 500 to gold. So today we're in that position where, gold definitely looks like it's still cheaper, optically. It's just that the volatility is on the higher side. And that's why we're still positive. There's a lot more to go. But short-term volatility being very, very high, we don't advise that level of risk be taken. But this whole data is on the global side. On India, you definitely have other opportunities coming up. Other opportunities that are coming up, which is why we want to switch into other good opportunities that may be arise. Now, another very interesting chart is the gold-silver ratio. What does gold-silver ratio essentially mean? It's basically how many ounces of gold you need to buy 1 ounce of silver, correct? So it also goes to show that whether gold as an asset class is cheap compared to others, etc., right? So now this yellow line is what indicates this gold-silver ratio. Is it a good space to be? The red line is the average level. Here is where we will discuss the purchasing power. So gold to silver, gold over silver ratio. Simple math, when the numerator increases, ratios, when your denominator increases, the ratio is going to fall. Numerator increases, your ratio is going to increase. So what do you think will happen when the price of gold goes up? What happens to the gold-silver ratio? Do you think it will become more expensive to procure silver or cheaper to procure silver? What happens? Your purchasing power of gold comes down. The price of gold is going up, right? Right. So historically, over say from 1950 to 2025, this line has been a little bit volatile. Now, this gold silver ratio is reversed. Why? What does reverse mean? People are looking at alternatives. They're looking at silver to be a better option. Gold is constantly going up, right? So this ratio is now at 100. So as of 2025, the ratio stands at 100. What we're essentially trying to explain here is that since the price of gold is going up, it's just skyrocketing. Now, in the last week and a half or so, we've seen some drop, but silver is, of course, becoming a better option to look at. This is where I'm going to go out on a limb and say that not all that glitters is gold, and I have data to validate that as well. So in the table, you see calendar year returns of silver and gold from 2000 to YTD 2025. Right, calendar year wise, gold has only silver has outperformed gold only 10 out of 26 years. But in a bull market, when there is a rally, silver tends to outperform gold even more. It does, right? The gray bar is for silver, the yellow bar is for gold. Uh, Even though it has outperformed in 10 to 26 in calendar years, we have seen significant outperformance when there has been a precious metal rally. So now looking at all of this, a question might still arise in your mind. Should you still invest in gold? Should I still park my money in gold? Are there better options available? We are seeing that there are better options. Silver is coming in to be a bright and very shining opportunity. It still remains a very bullish asset class. And as an investment advisory house, we also do suggest that incremental money be invested in other asset classes. Right now, just hit a pause on gold. We'll see how it is going, how it's doing, and then we can move ahead with making a decision on what to do. But right now, of course, we are seeing that silver is coming up, and we should definitely look at that as an opportunity. With that, I would like to conclude my presentation and open the floor to questions. And I request my colleague Harshil to take over.
Okay, so the question is, what is the final recommendation of from our team? See, our recommendation is that there are better opportunities. So don't chase it. If you're having it, great. If it's long term, do take some money off the table, take some risk off the table. If not, if it's not long, then you can continue to hold it. See, we are still bullish on the entire fundamentals of gold. Just that things are a little bit more on the volatile side. So prefer to go for another asset class itself like debt, and within the precious metals, prefer to go for silver rather than going or putting another rupee into gold. See, the question is, how does it matter when, as per asset allocation, commodities should be 10% only? No, commodities should not be 10%. There are periods where you need a higher allocation towards commodities. We have had a 20% odd allocation towards commodities since 2018. And we have been continuously scaling up on our positions in the gold, on the silver side. right? And we maintain it to be 20%. We don't look at it from a that no, it has to be equity should be this much. It's not fixed. It's always dynamic, and it's always preferred to have it more from a flexible asset allocation approach so that it can be tactical in nature, right? So of course, then it matters. Then having a higher weight definitely impacts portfolio. Okay, there's another question on USA is weakening the dollar. How does it affect the price of gold and silver? Will the price move higher? Yeah, the possibility of it going higher is definitely there. Just that over a short span of time, right now in the last couple of months, you've seen too much volatility coming in from a sentiment oriented side. Right? If the dollar is to be weak, then alternate currencies like gold, particularly gold, right, or other currencies also, or other alternate currencies like silver also start doing very well. So if you see from that chart before, where you have a bull case that is there on the gold market side, your other illiquid metals like silver tend to do far superior. Understand that it is illiquid, right? These are all illiquid metals. Gold is by far more liquid than it comes towards silver or any other metal that's there outside. So by virtue of its illiquid nature, it does very well. All right. Shall we do SIP or lump sum? Lump sum. Lump sum is the preferred approach here. What is your view on gold mining? Gold mining is extremely positive because prices of gold remain high. It is on a periodical basis also it is higher, right? So by that logic, they make a very strong margin on up and above their costs. So gold mining as a theme itself is very strong. So fund is shut. We cannot buy more units, but wherever we've had exposure on it, we have benefited the most out of it. We've put it on all across our platforms as well, saying that as per uh, risk appetites. There was a very good post that we had done last week where we had put out saying our investment calls, what the market was doing and what we were doing for investors. So Aishwarya, if you can just put that link out, that would be very helpful also to them. But
Yeah, I'll
that
just do
was
it.
yeah, that was the in that gold mining was a very big chunk for us. So we are still positive on the gold mining side, right? Okay, how to get silver? Because gold, there are a lot of funds, ETFs, etc. There is a silver fund of funds, so we can do silver fund of funds depending on risk appetites, depending on goals. We can do silver fund of funds. Why is the recommended allocation higher commodity than usual? See, at that point, uh, we wanted to have a higher allocation at that point, thinking that because of the geopolitical tensions that are there and because of the debt levels that were continuously going up, particularly after COVID. So we've been running this sort of positions from 2018 and continuously been buying that. So geopolitical tensions are rising, right? Debt levels were going up, deficit levels were going up. So it was not inherent itself that the strength of a particular currency should remain the way it is. So we were of the view that it cannot remain very strong because of all of these signs, and hence we wanted to be on the protection side. And we did not assume that gold will do this well. Our assumption was that we have to have one part of the position of the portfolio that is one safe, and second, we should not be paying more for it. So when we were comparing equity and debt and precious metals, at that point we did not find too much value on the debt side, so we did not. On equity we were able to find values in pockets, we were doing that, and we had one part where gold, that is gold, silver, all of this were coming in because inherently they were cheap and that they were safer bets than other asset classes. So that's why we had a higher allocation towards that. If today we don't have too much of a high allocation towards metals by itself. We have it on the silver side, but now debt has become extremely attractive. So we had done a debt webinar also, last week and a couple of weeks before that as well. So so that asset class has become extremely attractive right now, given that it has shunned away for the last 5 years. So that is why we had that's how we look at building position. That's how we look at allocation. Digital gold is safe. I don't know. Not too much work or not too much study done on the digital gold side. We would still prefer it to be more on mutual funds and ETFs. Not a lot of work has gone into digital gold. Okay, so there is a question on price of gold and silver is still cheap based on current situation and uncertainty. Uncertainty and current situation. See, silver is cheaper than gold, right? That's what that one whole slide about prefer silver. That is the slide that says that no, right now silver is more attractive than gold. Gold has had a good move, so don't try to chase it. Right? Inherent fundamental strengths are still there, but because it has gone up too much, a lot of people are trying to chase it. A lot of momentum has gone into it. Always prefer to go to a place where there is not a lot of uh, activity that has happened. Why this sudden hype on gold just because it rallied? Because nobody spoke about it until so. Are we chasing momentum like betting on the trend? Is it a correct approach? I don't know who you are talking about in terms of gold. Are you talking about us or are you talking about market? Gold bees or gold ETF, same thing. It just so gold bees tracks the price of gold, which is more on the either it is MCX or it is the London gold prices, and so that you will get to know in depending on the scheme that you're investing in. They'll have the SID, so that you will be able to see that. Second, gold ETF will just put money in the ETF, so more or less it's the same thing. So don't worry too much about it. There'll be some amount of tracking around. Even you guys never had an event. I've seen you attend multiple events on gold, so I'm pretty certain that we have done multiple webinars on gold. I've done 5 webinars myself. No, I think you can go onto a YouTube page and you can see that we've been doing this since 2023. 22, 23 onwards, we've been doing this. So you can have a look at it as well, yeah. It's very well available on YouTube. Correct, correct. I completely agree with you. But I've had so many fruitful discussions with you. It's so clear in my mind. It's like I'm always waiting. I hope that you're on all the webinars. It's so much fun to interact with you. Okay, is there a case for physical gold or silver? See, physical gold is meant for multiple use cases, right? So that is not something that you should touch over a long period of time. That's sentimental, it's emotional. I don't think that you should be touching your physical gold at all, right? If you're having physical gold. Silver for that matter, more it is more cheaper than gold. So there is an inversion case for it to put money on the silver side. You cannot store a lot of silver. It takes you will not have that level of storage itself for you to be able to store silver. If you do have it, then please go for the physical as well. But in today's scenario, right, silver does appear to be much more cheaper than gold. But physical gold, you will always have cases. You will always have a use case for it. It has to get used some way or the other. Jewelry, weddings, home, all of that has to get used. So we don't want to talk about the physical gold part at all. Physical gold you have to buy no matter what happens. Okay. Silver bar, it's good. Yes, if you have the storage, if it's feasible for you, no problem. Why don't the LinkedIn post to registered emails? Too much, no? LinkedIn is just for social media. You follow us on social media, you will keep getting notifications. But personal email, that becomes, I don't think that as a process is pretty good or pretty strong. Uh, when will the price drop? Don't know. Don't know if the price will drop also. No. Don't know if there'll be too much activity on this side or no. One thing that we know is it there has been too much volatility. So you should take some risks off the table. That doesn't mean that it is a bad asset class or it's going to have a significant drop. We don't know. When we have to say that, oh, we do not know that from here on what it will look like, then it's the first cautionary stance. So the first cautionary stance, you have to take some risk off the table. Social media method, yeah. Aishwarya, you can just put out all our YouTube, LinkedIn pages, so they can follow it and they can get regular updates.
Yes, Harshil, I will.
If you are on the program, also we are sending a lot of content on WhatsApp. So we do send out conversations on YouTube. We do send out webinars. We do send out uh, a lot of stuff. We do send out. So you have to get on the program first, and then you on what WhatsApp is a main source of communication also for us. Okay, since you've attended the webinar, you will come off on our WhatsApp list. So don't worry about that. With all the registration that we made you do in the start before the webinar, all those details we use, and we will send you all the updates on WhatsApp. So don't worry about that. If the Fed keeps interest rates at current levels for this year, will the price of gold and silver drop? Right now, there's no case itself for that. So they have disconnected completely from the interest rates as well now. And there was a period where they were connected. This period, they do not seem to be much connected. Now you can clearly see the connect between it and currency. I am not getting any message. I'm NRIS. Meta has a problem with the NRIs. So once they start fixing stuff on the Meta side, then definitely you will keep on getting messages. The only thing is you have to interact with the number. So this number, it just keeps sending us hi sometimes or the other. Just react to the messages that come to you also. But NRI messages are completely on and off. That we have faced an issue not only with you but with all the NRIs that we are working with. Okay, please another one in Tamil. Yeah, sure, we can do one in Tamil. No problem. Suggestion taken. Thank you for the feedback. We can. I'll just go back to the team. We can tell them that we can do this in Tamil. Okay, what are the currency trends to follow? DXY is enough. Yes. You see, the first thing is you get used to the dollar index, and then you will know. Recently, you had a very big movement on the Taiwan currency also, where the Taiwan appreciated. So you first follow the DXY, then you start getting news itself on all the other currencies. First step is to follow the DXY, understand the construct of the DXY, right? What uh, the movement, which currency is actually affecting a lot of the movement. Then you will understand how politics works for currency manipulation. Then you will understand that okay, these are things that are currently evolving right now in the market. This event has the potential to impact the currency in this manner. Then things will again fall into place for you. Okay, I don't think that we're getting any more questions. Then thank you all so much for spending your Saturday morning with us. Do follow us on all the channels that Aishwarya has put in the comment box. Right? Send us a hi on this number with whatever your requirement is. Our team will get in touch with you. See, this is a program where we want every investor who we work with to reach their full potential. And the first target that we're setting for all investors is that they should be able to achieve 1 crore. Right? So keep that in mind. Done. Thank you so much for your time. Have a great day ahead. Thank you.
Thank you. Thank you so much.